Welcome to the REI Diamond Interview, your source for real estate investment jewels of wisdom with Dan Breslin.
Welcome to the REI Diamond Show with Phil Falcone on how to become rich investing in commercial real estate. I'm Dan Breslin, host of the REI Diamond Show, and each week I invite another high-caliber real estate industry professional, investor, developer, etc., to share their unique experience as it relates to real estate investing. Our guest today is Phil Falcone. Phil is a Philadelphia area full-time real estate investor who started in this business at the age of 23 and whose portfolio today includes commercial offices, apartment buildings, and residential homes. Phil is the author of two books, Addicted to Real Estate and How to Buy Houses with None of Your Own Money, host of the Addicted to Real Estate radio show in Philadelphia, WWDB 860 AM, and also runs the Addicted to Real Estate TV show. Without a further ado, welcome to the show, Phil.
Hey, what's up, buddy? How you doing?
Doing well, and yourself?
You know, I'm living a charmed life, so you won't catch me complaining.
Nice. So I'm hoping that, a fellow radio show host is going to make my job easy and help me out and be just a great guest that answers all the questions free-flowing. Is that agreed?
Yeah, that's the only style I have is a natural style. When you're addicted to real estate and you really do this for a living and you love what you do, it's the easiest thing to talk about. Nothing tricky there.
Sweet. For everybody listening, let's go with like the Reader's Digest version of your career, maybe what you did before you started in the business of real estate and kind of what led up to and maybe what your business looks like today.
I started in the business in 1989 at the age of 23. And I've done other things, but I never really had my heart into it. I went to college. I have an associate's degree in engineering. I worked as an engineer for 10 years. But it was always like a part-time thing, and I worked as a salesman selling some of the equipment I used to design, but it was always a part-time thing. My heart was always in real estate. I made that decision somewhere around the age of 17, 18 years old, and I had some great mentors. My parents, who are both still around, were entrepreneurs their entire lives. They ran businesses, multiple businesses. My mother was the brains behind the operation. She did all the sales, the marketing, all the business strategies. So my mom was really the person who oversaw from a presidential role every one of these small companies that my family run. My father did a lot of the grunt work to get it done. They were in the printing business. They sold wedding invitations. They did resumes, helped people find jobs, all kinds of different things that they were involved in. And I grew up really enamored by that, like just watching. I was very proud of the fact that my parents never had to work for anybody else. They weren't like rich. I'm not trying to say that they were incredibly rich, but what they were was free. Nobody could fire them. Nobody could do anything to them. They were their support system for each other. And that's how they provided for our family. And I had a very nice childhood. I lived in a beautiful neighborhood in Philadelphia, never wanted for anything. And my father was a hard worker, and my mom was too. And my mom instilled this entrepreneurial behavior in me from a very young age. Believe it or not, playing Monopoly. Okay, back in the 70s when I was a kid, there wasn't a whole lot of business games. There still aren't a whole lot of business games. Somebody like me should invent one of these days. We played Monopoly. My mother had done some real estate investing, but she was more of a business starter, okay, and a person who ran businesses. So they weren't heavily involved in real estate, but she saw Monopoly as a real estate game and a money game, and she definitely believed that wealthy people own real estate. So we played Monopoly all the time. We did something that maybe a lot of families do. I'm not really sure. I've never played Monopoly with other people's families. But what we did is we changed all the rules. Because after you play that game, after you play that game a bunch of times, some of those rules just need to be revised. So I'll tell you some funny stories about it. One of the rules that we changed was Why do you have to go around the board one time before you buy real estate? There's no reason to wait for that. You don't have to wait in the real world, so why would you wait in this game? Let's get right into it, okay? And the whole concept of the whole concept of building 4 houses, then knocking them all down and putting up a red hotel, that doesn't make any sense. So if you've got the cash and the wherewithal to build the hotel right from the get-go, then go for it. And another thing we did is we had unlimited trading was allowed. You could make any kind of deal you wanted with anybody, anytime, just like the real world. And my mother agreed to these rules because she was a businesswoman, and that was the whole point of playing this game, besides spending time with your kids. And so we were allowed to make deals all the time. And another change that we made, which I love, is you didn't have to wait for your turn in order to make a deal. So try to imagine that there's 4 or 5 of us playing Monopoly, and no one is, when it's your turn, you can't even think straight because everybody else is making deals and talking all at the same time. So it was more like it was more like being on a trading floor of a stock exchange. It was a lot of fun, and we used to have a blast. And I'm not lying to you when I tell you that I won most of the time. I used to manipulate my brother into doing questionable deals with me. And it was just a fun thing, okay? And it got me into real estate. I never really met anybody who was a successful real estate investor until I was older, and I met a guy. I actually met him in a bar when I was like 17. Back when I was 17, ID was pretty easy to come by. They didn't even have photos on driver's licenses or anything. You could actually type one on one of those typewriters that had a golf ball in the middle of it. I forget what you call them. Anyway.
Oh, gosh.
And I was hanging out in a local bar when I was 17, and I met a guy who was in the real estate business. And he actually took me out to see some duplexes that he owned. And, you know, I was pretty fired up about it. I went home and I told him, I don't even remember the guy's name. I went home and was talking to my mom about it. She goes, hey, I got a great idea. Let's go out with let's call a local realtor and have him show us some houses. So my mom made the arrangement. I still don't know who that realtor is today. I never saved her card or anything. It was so long ago. She took us around. She showed us some properties. And in that one afternoon, I had made up my mind, I'm going to be a real estate guy. So this is when I was probably around 17, 18 years old. I wasn't able to buy my first house till I was 23. But back then, I didn't know any other strategies other than conventional strategies. So I was working, saving my money for 4 or 5 years until I was 23, and I was able to buy my first house. I bought 2 properties in my first 11 months. So I came out of the gate swinging like crazy. I bought about $250,000 worth of real estate in 1989 in 11 months, which was probably considered a lot back then for somebody at 23. And been in the business pretty much full-time ever since. 27 years. I'm loving every minute of it, and I'm still addicted to it as much today as I was the first time I decided to get into it.
Nice, Phil. So let's talk about, I know we're going to get into the commercial real estate deal, but you have myriad pieces to the real estate puzzle today. Can you just talk about and touch on each of the main points of your businesses that you kind of manage in the Philadelphia area and elsewhere throughout the country?
Sure. I mean, to me, a piece of real estate is like a business, okay? It's no different than really owning a business. Every single piece of real estate has to sustain itself. It has to earn a profit. It has to do everything that you want a business to do. Otherwise, just get rid of it because you don't need it, right? So to me, I own a bunch of different types of real estate, a bunch of different kinds of real estate and different strategies that I use with these properties. I have a whole lot of rental properties in the Philadelphia area where I grew up. I buy houses, stores here. That's something that is pretty unique to our area. There is nobody around here that I know of who has an actual I Buy Houses store where people show up at these stores and they trade in their houses much like somebody would trade in their car at a car dealership. So we have one of them in Hatboro. We have one of them in Montgomeryville, Pennsylvania on 309. And we work out of these offices. I have a business partner, Jeremy, that I do a bunch of deals with. I know your audience probably knows Jeremy. He's a brilliant guy. He's been on your show in the past. Jeremy works at one of the stores. I work at another one. And then, so these stores are basically our base of income. Leads come in. We do all kinds of various things with these deals. Sometimes we buy them and keep them. Sometimes we wholesale them. Sometimes we wholesale you to yourself is a strategy we use. And a bunch of other exit strategies that we do with these properties. We could talk about that later. I also am involved in executive suite centers. So executive suite centers, I'm going to talk about that today when we get involved in the commercial real estate conversation, is one of the most lucrative commercial strategies that you can be involved with, and one that you will be very happy you got involved with if you ever do. I also own some apartment buildings, and I own a whole slew of vacation rentals in Sarasota, Florida, which is, you know, all of these businesses are really just owning real estate, okay? I'm giving you different strategies of methods that I invest in real estate, but to me, it's all just real estate owned. And each and every one of these addresses is a business for which I evaluate on its ability to sustain itself, make a profit, build equity, and ultimately the goal of making me rich and making me happy. I also own a real estate agency called Addicted to Real Estate Agency, where I have like 26 agents, mostly all investors, who hang their license with me. And, you know, I make some money off of the agents' activities, but the real benefit to me is that I am surrounding myself with a family of people who are like-minded, who think like me, who can help me, who can bring me deals when they can't fund them, or anything you can imagine. So it's like a family of real estate investors that all hang together. And then finally, the other business I'm involved in is the education business. I call it Addicted to Real Estate Education, where I am teaching people, just like we are today, just like you do, Dan, is I'm teaching people about what I do. Why would I want to teach people? Because I love this business. I'm addicted to it. I want to share with people, and wonderful things happen in life when you help other people.
Yeah, you're absolutely right about that, Phil. And I think it was one of the, you guys do like the meetup groups, and you guys have taught at those things, and I think even in addition to that, you do some more. But I believe that's where you and I met, was at one of your initial education events on, you know, raising private money, or one of the popular topics.
Yeah, I think we did meet a couple of years ago at one of my meetings. And you know, the radio show that we do, the TV show, I have a TV show on YouTube. It's called Addicted to Real Estate TV. You can just put in Addicted to Real Estate on Google and all my stuff pops up. I have a radio show in Philly. We call it Addicted to Real Estate Radio. You start to pick up a trend here. Everything I do is addicted to real estate. And they're all methods for which I can help people and meet people, develop private lenders, find real estate deals, and everything else under the sun. So all the different, my vision was always have all these different real estate related companies that feed off of each other. So I can go to a real estate meeting where I'm teaching maybe some newbies how to do wholesaling. But at that meeting will be an experienced real estate agent who will come and join my company, and that's a way that enriches my life. And maybe there's a newbie there who finds a real estate deal that they found a really good deal, but they can't fund it. And I don't lend people money, but I will partner with people. So I'll put up the money and partner with them. So all kinds of wonderful things come from it, and that's basically what I'm focused on, surrounding myself with like-minded people like yourself.
Let's talk about this decision point, or this jumping off point, Phil. I know a little bit of the story, so I'm hoping I'm staging this question and this like lead in correctly, but I believe you were doing single-family rentals, you were buying rentals, and there was kind of like a pattern. And then there must have come a time when we get to like what would be considered at that point in your career, like, oh my gosh, this is a pretty big freaking deal. Like, you know, there must have been some like emotional things you dealt with as you made that decision and took action on that. And I'm hoping that that was the deal that we could then like kind of pick apart and talk about being, you know, a new experience, a new level, getting into a new niche, starting into commercial real estate. Am I correct in that assumption, Phil?
Yes, you are. Let's go back to say 2003. Residential real estate was doing well, and it even had a lot more upside coming to it. 2000, 2001, even 1999, 2001, 2002, 2003 were excellent years. Real estate prices down the Jersey Shore were going up like crazy, like 60% a year. In the Philadelphia area, everything was popping. And back in the day, I remember opening up the newspaper. Believe it or not, I used to read the newspaper back then, and it seems like it's like a dinosaur thing now. But I used to open up the newspaper, and I would see properties being sold in the neighborhoods that I owned a bunch of properties. And I'd be like, wow, that's like $5,000 more than I thought these houses were worth. And I used to see my net worth going up sometimes, 10, 15 grand a week. It seemed like with the prices that were so crazy. And it made me start thinking about cycles more. And when I started in 1989, if you know anything about cycles, 1989 was not a good time to get into the real estate business. I would have been much better off if I delayed my entry into the business a few more years. But I was 23 years old. I did not have a whole lot of education on the topic. I wasn't reading books voraciously like I did later on in my career. And the timing wasn't great. So I made out fine with the buildings, but I needed to hold them for a while, and I was probably in a negative equity position because in 1990, 91, 92, 93, 94, 95, the market declined. Nothing like the crash that we had in 2007 timeframe, but the market did trim back. And I had even been given advice from people to say, well, you should just let those properties go. And thank God I didn't follow that rotten advice. This time around, so now we're back to 2003, I was determined to make sure that I didn't make that mistake again. It's okay if you make mistakes in business, but you sure better learn from them so that you don't do them again, right? And that was my mindset. And so what were my options? Well, I could have dumped my portfolio and pulled out, millions of dollars. And that was something that is very counterproductive to Phil Falcone. I am truly addicted to real estate, and I love the business I'm in, and I think I'm great at it. And maybe the reason I'm great at it is because I really, really love it. And it's a rare day when I meet somebody who's out invested Phil Falcone. I mean, that's just the way I think, okay? I'm having such a good time that I guess I'm fired up about every deal that I do. I get excited about it, or I don't do the deal. So I started thinking in 2003, what am I going to do? I mean, I can't just sell everything. That would be counterproductive. I'd be leaving the business. I'd have this huge tax windfall, and then what am I going to do, right? At that, I was doing nothing but real estate. Nowadays, when people say, what do you do for a living? I say, real estate investing. It's all I do. It's all I've ever done. It's all I ever want to do, okay? That's me. So it's very hard for me to leave the business. So I came up with this idea. What was I going to do? I came up with this strategy. I am going to take my greenhouses and I'm going to trade them in for red hotels. Everything going back to the Monopoly game, Dan. Everything going back to playing Monopoly, okay? I said, that's what I'm going to do. I remember telling my mother, here's what I'm going to do, Mom. I'm going to trade in all my greenhouses, and I'm going to find a commercial deal. So how do you learn about commercial real estate? Once you've made the decision that you want to learn about commercial real estate, how are you going to learn about it? Where are you going to go to learn about it? Well, you can't go to your local college and say, I'd like to take a class in commercial real estate investing, because nobody there knows anything about it. And if they did, they'd be doing it. They wouldn't be teaching it. So you have to kind of learn it for yourself. So I did it by the School of Hard Knocks. And what I always tell people is here's how I got into business. I called the signs. What does that mean? I called all the commercial real estate signs that I saw. When you're driving from your house to work every day, you probably drive by 15 of them and you never pay them any mind. Well, I decided to just start calling them. So I started calling real estate deal after real estate deal, one after another, meeting with commercial brokers. Most of them wouldn't give me the time of day. Their first question was, well, what kind of commercial investing do you do now? I didn't do any, and most of them weren't interested in talking to me, and I got a lot of cold shoulders. Nowadays, they call me all the time, and I don't return their phone calls. So it's funny how it's funny how tables turn in life. And what I started doing was I started meeting with owners, meeting with agents, for commercial real estate and trying to learn as much as I could about this business. And a funny thing happened, Dan. After doing that for about 6 months to a year, I had all the lingo down. I had been in enough of these meetings that I knew exactly what to say and what to do when I was in them. And I started to appear extremely confident. I'm a very confident guy to begin with, so, but I was extremely confident. And people knew right away when they met me that this guy was for real, that at least that was the perception that I believed that they had about me, was that I was for real and that this guy could really buy this building. So what am I doing now? I'm looking for the best deal I could find. I bought a bunch of different buildings, backed out of some of them for various different reasons. You can read about all of the details of my basically 3 years of running around looking at commercial real estate. I basically stopped making money, but I had a portfolio that was pretty strong and could support my needs, and I went around for about 3 years doing nothing but looking for the great commercial real estate deal so I could take a bunch of my greenhouses and trade them in and have one building that would have a rent roll so strong that it would support my family through the downturn that I knew was coming. I didn't know when it was coming. I wasn't sure if it was going to come next year or if it was going to come in 3 years. So that was the concept, that I'm going to use commercial real estate as the vehicle to propel me, rocket fuel, to propel me, ramp up my rents, ramp up the number of tenants that I have, ramp up the equity that I have, to a point where these powerful money-making machines, these beautiful pieces of real estate, these businesses are going to support me through the downturn. And that was the whole philosophy about it. You want to talk a little bit about the first big building that I bought, the real first big rockin' and rollin' commercial piece of real estate that I bought?
Yeah, let's talk about exactly what you found that deal, and then I assume you're talking about like doing a 1031 exchange with all the houses when you say trade them in, and that high wire walk. Let's dive into the details of that, Phil.
Okay, so after looking at all these buildings, I had 4 or 5 different multi-million-dollar projects under contract, and I backed out of the deals for various different reasons. One of them, you have to read my book to get all the details behind it. I don't want to go through all the details of why they went through it. But a funny thing happens when you look at mediocre deals. What happens is when you find a really great deal, or what I call a real deal, you're able to make up your mind in a microsecond, because the bad deals teach you that when you see a good one, you'll know no time to waste. So I find this building for sale for $2.3 million, and it's an executive suite center. I always tell people that I love businesses that have what I call extreme cash flow. So for me, I have 3 types of businesses that I think are extreme cash flow. There's probably more, but these are the 3 that I identify with: student rentals, executive suite centers, and vacation rentals. Today, I am involved very heavily in executive suite centers and in vacation rentals. I still, to this day, do not have any student rentals, not because I think there's anything wrong with it. I think it's a great strategy. I just, I'm already involved in so many other things. I just haven't found the right college campus or whatever you want to call it, and I haven't done student rentals. So this property, this executive suite center, is for sale for $2.3 million. It's got a rocket fuel powered rent roll of $42,000 a month gross rent. And if you guys know anything about cap rates, we'll talk about that in a little while, but it had a 12.5% cap. So that's a bigger the cap number, the better the deal. Okay, the cap rate is loosely tied to your rate of return that you could expect on a piece of real estate. So I did some negotiations with the real estate agents. That there were 2 real estate agents. They were a team. They needed multiple guys for a big deal like this. I don't know. And I wasn't able to talk them down very much. They agreed to a sale price of $2,150,000. Basically, I was in need of a down payment after talking to a potential mortgage company and getting pre-approved for a mortgage of a $475,000 deposit in cash is what I needed. At the time, I had $10,000 in the bank. So I was roughly $465,000 short to buy this building. But that's a minor problem that I'm going to tell you how I resolved that. The first problem was I had gotten a seller to agree to sell to me for $2,150,000, which is a very short discount, not a big discount on a deal this size, but I would have bought it for 2.3. I would have even paid more than the asking price for it. So I wanted that rent roll. I wanted that $42,000 a month. That's what I wanted. Somehow, these two real estate agents who were working for a huge commercial real estate brokerage in Philadelphia allowed the seller to sign the papers giving me an agreement of sale that locked up the property for 90 days off a market. And I believe there was even a clause in there that gave me an additional 30 days if I needed it. So I had basically taken this property off the market for 120 days, 4 months, and nobody asked me to show them the money. You know, maybe it was because of my overconfidence. But it just goes to show you, like, people say, well, weren't you nervous or whatever? Now, I was going around looking at buildings for 3 years. This building came somewhere in the middle of the 3 years, not at the end of the 3 years. But, you know, these realtors did their clients a terrible disservice. It is their job to make sure that if I am a listing agent for a piece of real estate, I will never let my seller sign a contract unless I know that the buyer has been qualified, not just with a letter from a bank. Back then, you could get a pre-approval from a bank by picking up the phone and they fax it to you 10 minutes later. They never asked me to show them almost $500,000 cash. I mean, amazingly deficient in their job description, these agents. Make a long story short, they signed the contract. So what am I going to do now? I got to figure out a way to come up with $475,000 cash, right? So what do? We go back to Monopoly again. I look at my portfolio of properties. I took 8 of the properties that I had bought early on in my career. It's very important that you get started in this business young, because if you want to make a big move, you're going to need the properties that you've owned for quite a while so that they've had an opportunity to develop some equity so you can do a deal like this. And I took 8 of these buildings, and I'm a licensed agent in the state of Pennsylvania, so it was easy for me to do. I went on my computer, and I put them all up for sale. I called it the fire sale. I took 8 of my buildings, and I put them all up for sale at the same time. And I got pretty lucky because keep in mind that in this now, actually I did find this building in 2006 is when I bought it. So 2006 still wasn't obvious. There were lots of signs that a crash was coming, but it hadn't really started yet. So 2006 was a great time to sell buildings. And 4 of my buildings, each of which had roughly $100,000 in equity, sold very quickly. And on 2 of those deals, I actually got to be the agent on both sides of the transaction, which helped me tremendously because I saved a lot on commissions, which came back to me. So the funny part about these 4 houses is 2 of them were partially green. One of them had green shutters and a green garage door. And one of them had light green siding on it. And I thought, wow, man, it's like an omen, you know? You know? And the building that I was buying is a brick building. And the color of the bricks probably would more descriptively be called maroon. But maroon is a shade of red. So I thought, man, it's just like playing Monopoly. I'm playing Monopoly for a living. That's all.
Nice.
I mean, look, if you have fun in what you do, it's all just a great time. So let's talk about this deal a little bit. I'll go into cap rates a little bit, so you guys need to understand this if you're going to try to get into the commercial real estate business. First thing you do if you're trying to learn about commercial real estate is you have to calculate the net operating income. So what's the net operating income? It's really easy. You take the gross income that the building is making, and you take this case, it was $42,000 a month, and you take the actual operating expenses that this building is spending right now, and obviously you get this information from the sellers. So if you can get them to sign an agreement of sale, you've only tackled one hurdle. Now you're in what we call the due diligence period, and my due diligence period was 90 days, so that's a lot of time for a piece of real estate. Most people I would never give anybody 90 days to settle on anything I own. I'd give them 45 max, okay? And I certainly wouldn't give them a 30-day extension beyond the 90 days. So what you do is when you're in the due diligence period, the owners of this building, they have to provide you, they don't have to provide you, but if they want to sell the building to you, they're going to have to provide you with all the information you need. So you get the gross income, you get the tax returns, you get their bank statements, you get all these things, and you calculate the net operating income. Basically, first thing you have to do is determine that. So you get the gross income, you minus the operating expenses. Now you know what the net operating income is. And you divide that number by the sales price. Basically, if you take $42,000 a month, you times it by 12, the net operating income is $268,000 a year. I'm sorry, it was $42,000 minus the operating expenses multiplied by 12. Turned out to be $268,000 a year. And you divide that number by the sales price, and the sales price of this building, if you remember, was $2,150,000. And the number that you come up with is 0.1247, which you just translate into 12.5% cap rate. It's very, very easy. This is like 7th grade math here. It's no big deal. And you just learn that what does a cap rate really mean? I'll explain it to you a little bit so you can understand it. But basically what it means is it loosely means that I should get a rate of return on my money of roughly 12.5%. Okay. So
Phil, if I could just ask you, right? If we bought this $2.3 million property, right, in 2006, and that was a 12 cap, if I had to guess, I would say cap rate for this building right now in today's market is probably around a 7. Would that be fair?
Not for this kind of building, and I'll explain why. Like, if you look at an apartment building, for example, apartment buildings typically are turnkey type of buildings. There's lots of work that needs to be done, but if an apartment building is big enough to be worth a couple $1 million, it typically comes with a property manager, a maintenance guy. It kind of comes with that all packaged together, right? What made this building different and unusual and probably unappealing to some wealthy investors is because this building required the owner to run this thing personally. In the executive suite center business, this had 47 offices in it, this building. But in an executive suite center business, what is an executive suite center? Let me explain that, okay? We give you everything, okay? So the question I always tell people is, what do you get for $495 a month at Executech Suites? Have you ever heard me answer this question, Dan?
I think I have, but go ahead for everybody listening.
Right. Well, this is my elevator pitch about Executech Suites, okay? That's the name of the building, Executech Suites. My elevator pitch is, what do you get for $495 a month at Executech Suites? You get an office big enough for one person. You get the furniture in that office. You get the telephone on the desk. You get the telephone number. You get the fax number. You get 2 full-time receptionists to answer the phone in the name of your company and patch the calls to you. ABC Painting Company, how can I help you? Would you like to talk to John Smith? Let me patch the call to him. And then John Smith gets the opportunity to decide if he wants to call or not. You get the conference rooms, you get the mailboxes, you get the printer, the copier, the scanner, you get the utilities, and you get free coffee. Okay? All of that you get for $495 a month. So that's what you get in an executive suite center. The concept is also referred to as like a business incubator. Okay? The idea being that this guy who works at a small business in his garage moves into a building like this. All of a sudden he's got a receptionist answering his phone. He's got a big conference room he can use. He might have a tiny little office, but you'll never know that if you're his client because you never go to his office. You go to a lobby that has receptionists. The receptionists take you to the conference room, and he meets you in the conference room. So the whole concept of executive suite center is designed to take a small little guy in business, make him look bigger, and give him services that he can't have working out of his garage. Okay? So imagine if you've got 47 offices, and this building was 13,000 square feet. If you rent a commercial piece of real estate out like a warehouse, you could probably get, I don't know, I don't even know what you could get, $10 a square foot rental or something. But when you chop a 13,000 square foot building into 47 different size offices, the actual rate of return that you're getting per square foot goes up to like $50 a square. Okay, you got a lot of wasted square feet because you got hallways, you got conference rooms, you got kitchens and bathrooms that you're not actually collecting rent on. But some of these little offices, imagine an office 10 foot by 10 foot with the furniture in it that I provide, with the artwork, with the telephones, with everything you need. All you got to do is show up with your books and your computer and you go to business. You're in business. I might be renting that office for $595 a month. And so I'm getting $10,000 a year or whatever for an office of that size, $595 a month. Plus there's some other charges, like you can get get phone bill for your outgoing phone calls, and if you use the copier and all that stuff. So this place, you put it all together, all these little offices, this place is a rocking and rolling machine. It's $42,000 a month. So let me tell you some more about how you can evaluate a piece of real estate. With cap rates, different buildings have different kinds of cap rates. Apartment buildings typically are much more in the number range that Dan said, somewhere around 7% or even 6%, okay? And there's enough people like REIT money, for example, REIT meaning real estate investment trust money. People invest in REITs in the stock market, and millions and millions of dollars are controlled by these REIT managers. And they want buildings that are easy to run. This executive suite center business is not very easy to run. This is more involved in it for sure. But in an apartment building, you're not providing people with all these different services. So in the executive suite center, every single thing that goes wrong is my problem. This office is too cold. 20 feet down the aisle, the offices are too hot. And they're all controlled by the same heating system. How do you manage that problem? You're answering their phones. Every single thing that goes on there, you're providing for them. So it becomes a very labor-intensive business, but you're paid handsomely for it. In an apartment building, you're not doing a whole heck of a lot. You're just got a maintenance guy who goes around and fixes a loose hinge, and you got somebody else who collects the rent money once a month. It's pretty simple. So because there's less involved in it, those things tend to sell. There's a lot more interested buyers for them, which tends to make them sell for more money, which tends to make the cap rate lower. But in this business, let's just say we're down. You take $268,000. Let me invert the numbers. I just told you how you could figure out what a 12.5% cap is. Now let's reverse the numbers. You take $268,000, you divide it by 0.1247, and it comes up with the sale price of $2,149,000. All right, so you can see you can invert the numbers to double check them if you're not sure your math. All right, so the first thing I did was I started to look into what were the local cap rates for other office buildings in the area. And the actual local cap rate for other offices in the area was much closer to what Dan recommended. At the time I was buying this building in 2006, the local cap rates were 8%. But they were different kinds of buildings. Their buildings were strictly, here's a whole floor of 10,000 square feet, and some law firm will come in and just rent it. And the owner didn't have to do anything. So that's one of the reasons the cap rates were different. Okay, so I said to myself, okay, well, if competitive office buildings are selling at an 8 cap, what would happen if I took a $268,000 net operating income and divided it by 0.08? Well, that number came up to $3,350,000. So what did that show me? It showed me that I wasn't overpaying for this building, that I could have even converted the building into a traditional office building and maybe got $3.3 million after I filled it up. So I started feeling pretty good about paying $2,150,000 for this building. I always felt good about it. I felt great about it from the moment I saw it. But I'm sort of going through the mindset of the investor here, because this topic is supposed to be about how to get rich in commercial real estate. So I want to share with the listeners how you can figure out if the building is a good deal. Now, here's another easy way to do it. I call it the the times 10 valuation calculation. The times 10 valuation calculation. It's a nice tongue twister for you, right? You take the net operating income and you just multiply it by 10. You can do that while you're sitting in your car waiting to go look at the building, right? So if you know what the net operating income is, and sometimes that will be available information to you, because if the commercial realtor listing the building is worth his weight, he'll put that in a memorandum for you, so you'll have that prior to looking at the building. So if you take $268,000 and you times it by 10, the sales price is $2,680,000. Now, if that number was correct, if the times 10 valuation calculation was correct, I was buying the building for $530,000 less than that calculation told me it was worth. So I'm feeling pretty good about it. Let's talk a little bit more about cap rates. I don't want to bore you with all this stuff, but it's important to understand it. There's another way that you can break a cap rate down. So I just gave you a couple of ways, right? You could do the times 10 valuation calculation. Another quick way to figure out the cap rate is you just take the gross income and you minus the expenses and you figure out what your NOI is and you divide it back and forth using the sales price that you've negotiated. And then you can also look at the local buildings. Well, here's another way to even break it down further. If you look inside the cap rate, you can actually do some math and figure out what your cap rate might be. So here's an example. Let's just say you were getting an 80% mortgage on a building, and the interest rate you were paying on that mortgage was 7%. You multiply the 80% times the 0.07 interest that you're paying on the building. That gives you a number 5.6. Okay? Then you take the down payment that you're putting down on the building. In this example, I'm going to say it's 20%. And you're going to multiply that by the return on your money that you're hoping to get. So in a simple example, let's just say I'm hoping to get 15% on my money. So 20% times the 15% return on your money, that gives you a figure of 3. And then all you do is you add those two numbers together. 5.6 plus 3 equals an 8.6 cap rate. Okay? Why would I give you that example? Because I'm trying to show you that outside factors adjust the cap rate. It's not just what other people are willing to pay for the building. It's not just based on how much money the building makes. It's based on how much down payment you've got to put down and what kind of rate of return you're looking to get and what kind of interest you get on your mortgage. So all of this stuff that I'm talking about is documented in my book, Addicted to Real Estate. So if you guys really want to be commercial real estate investors, I recommend you go to Amazon.com, buy a copy of Addicted to Real Estate. It's $20. Okay? It's like nothing. And the information in there is amazing, and you'll love it. And you'll really learn a lot about commercial real estate. Basically, what I would say is there's some other things that will come up when you're looking at commercial real estate. And some of those things are, you'll hear the phrase pro forma numbers. Commercial real estate agents are always talking about pro forma numbers, which means what is the building capable of making in the future? My opinion is you take that page of the memorandum, rip it out, and throw it away. All right? That is useless information. I've had so many owners of buildings say to me, I could have rented this office 10 times already. Okay, well, why didn't you? Well, what's wrong with you? You're in the business of renting property, right? Don't tell me what you can do with it. Commercial real estate is valued on what it makes today. You're buying a business. A business is valued on how much money it makes. End of story. Don't tell me what it's going to make or what it could make or what it should make. Tell me what it makes. End of story. So I would warn you, never pay attention to pro forma numbers and never buy a building based on the pro forma calculations, based on what it earns today. Another thing that I like to tell people is I like to say that this deal is calculator proof, okay? Now, I've just given you a bunch of calculations, how you calculate a cap rate. But the point to saying that a deal should be calculator proof is I knew I was going to buy this building the minute I saw it. I knew I was going to try to buy it. I didn't know if I was going to be able to buy it, all right? Because when a deal is that good, you don't need a calculator for it. And I never needed a calculator for this deal. I saw it and I knew I needed to buy it. And I've owned it now for 10 years, and it's this beautiful business. I love this business. I have emotional feelings for this business. My wife runs the whole thing. I never even go there anymore, and I get a big fat check every month from this wonderful office building that I love it. I really do. I don't use any programs to calculate if a building is a good deal or not. I use common sense, right? I just, use the knowledge that I've obtained in this business from reading books, from playing Monopoly, from living my life as a real estate investor, and I use common sense to figure out that this is a good deal. And, like in the residential world, when you buy a piece of property, you run comps, and it's a lot easier to make a decision. Commercial real estate's a little more complicated. So that's kind of a nice summary of what I think you need to know to get started buying commercial real estate.
So, Phil, that was a great example. I'm going to ask one more question on the commercial piece before we hit our wrap-up questions here. If someone's listening, I guess part of the question is, when do they know it's the right time to make that shift? Would you advise against somebody who's maybe newer in the business, a year, 2 years in, or maybe hasn't even done a deal, from getting into that commercial deal too early? Or would you suggest that to do the first deal the same way that you did, where you're bringing your own equity to the table when the time is appropriate in your own investment career, as opposed to raising private money to take down a deal? Would you have a cautionary warning against either, or would you have any advice as far as, when would be the right time for an investor to make that transition?
Well, I guess, it depends on the investor. I knew it was the right time because I'm a pretty aggressive guy, and I felt like I wanted to do something greater than what I was doing. I would say you got to be careful, okay? You can get creamed in the commercial real estate world. You really can. You have to be cautious, and you have to be careful because you're dealing with much bigger numbers. And if it goes wrong, you could have yourself a big problem. One thing I always tell people, when the market crashed, guess what I went back to doing? I went back to buying single-family homes. Why? Because it was smart, because it was easy, because I couldn't get hurt, right? I was not buying multi-million-dollar buildings in 2008 and 2009 and 2010. That's with the market declining through all those years. So I don't think it's a good time to be making multi-million-dollar acquisitions. I didn't start looking at multi-million-dollar buildings again until sometime around 2012, when I knew that the market had hit the bottom and wasn't probably going any further down. So would I say that it's a good time to buy commercial real estate in 2016? Absolutely, I would. I would recommend that you can use private money to buy commercial real estate, but it better be one amazing deal, because you're not going to be able to afford to pay huge interest rates on it. You're going to want to lock down, especially multi-million-dollar deals. You got to make sure that you're locking down low interest rates. I just did a deal with this executive suite building that I'm talking about 8 years into the building. I got a loan from the Small Business Administration, fixed rate. They gave me like $1.8 million. Fixed rate, 4.25 for 20 years. Now, if you know anything about commercial real estate, that is unheard of. You usually get you get a balloon every 5 years where the rate resets. So you can do some great things with a piece of commercial real estate if the deal makes a lot of money, like this deal did. So, in closing, about your question is, I'd recommend reading a lot of books about commercial real estate. Everything that I know about commercial real estate, I put into Addicted to Real Estate. So if you're really into it and you really want to do this, definitely read the book. You'll learn a lot of lessons, and learn from my mistakes and from my successes.
And it is a great book. I did read that when we first met. Definitely worth checking that one out. So a couple questions here, Phil. Who was the most successful real estate investor or developer that you know, and why? You could know them personally or maybe publicly, dead or alive. If you want that person to remain anonymous, you can just kind of tell us the important aspect of the question is why you think they're successful.
My favorite real estate investor is a guy you may have heard of before. His name's Donald Trump. He's in the news occasionally. His book, The Art of the Deal, which he wrote, I believe, in like 1985, really captivated me. It's an amazing book. And I read that book right around the time I was getting into the business in 1989. And it's fascinating. When you read that book, you feel like you're standing behind his shoulder as he does one amazing deal after another. And it takes you know, it is true that his father was set up in the real estate business, and he had helped him buy his first building. And he talks about it in great detail. He buys this 600-unit building in Cincinnati, and him and his father do the deal, and then he takes the profit that rolled from that building, and he moves on to his next one. And I actually modeled my book, Addicted to Real Estate, after his book because I was so impressed with it. And the learning, a lot of real estate books are written in the how to do it. Do this step, then do this step, then do this step. That gets pretty boring. I wanted to write a book that was more like Donald's book, which was stand behind me and listen to what happens as I tell you the story about this deal. And I go into a lot more detail in the book about the deals that I've done than I can on this call because we have time restraints, but you will learn a lot, and you will really start to get it by the time you're done reading important books like these two. So I think that Donald Trump is the real estate investor who took roughly about $1 million and turned it into his current net worth is supposedly $10 billion. That's a pretty good rate of return on your money.
Can you name 2 or 3 life-changing books other than The Art of the Deal, maybe? Business, real estate related, or even success mindset related?
Yeah, I tend to read a lot of real estate books. I mean, one of my favorites is How to Buy Apartment Buildings by Steve Burgess. He defines a strategy which he calls the value play in that book, and it's definitely worth reading about. I've done that strategy, the value play, many times. But nowadays, what I do and what I focus on most of the time is buying pieces of real estate that are going to make money. Remember, they're businesses. They have to be something that's going to enter my portfolio and take care of itself until the end of time, and buy it with none of my own money. And if you learn how to do that, it puts every other strategy known to man in the wastebasket because it's not something that I need anymore. So my goals these days are to buy properties with none of my own money. And my new book, which is actually not on Amazon just yet, but it will be in about 2 weeks, sometime in early May, How to Buy Houses with None of Your Own Money. You definitely want to check that out. I mean, once you learn those strategies, you are golden for the rest of your life. You don't need anything else except the knowledge in your head to do any real estate deal you want to do. And that's a beautiful thing.
Nice. Phil, if you could share the crown jewel of wisdom with your 18-year-old self, what would that be?
Well, it's funny you say that because my 18-year-old son is graduating high school in about 8 weeks, and he's coming to work with me. So I'm pretty up on what you say to an 18-year-old.
Nice.
He's decided not to go to college. He wants to be a real estate entrepreneur, and I have no idea where he got that idea from. What I've told my son, and it's what I tell anybody, don't ever trade your time for money. That's basically what you do when you get a job, okay? You provide them an hour's worth of your time, and they pay you. I mean, I shouldn't say don't ever do it. You could do it if they're going to pay you $1 million a year. Even I'd be tempted to take that kind of deal. But trading your time for money is very difficult to get anywhere in life. You want to use the knowledge that you've obtained in life to go out and earn yourself money. And the deal that we just spent the whole call talking about, this executive suite center, I mean, I could probably sell that building today for $2.5 million, and I owe $1.5 million on it, all right, or somewhere in that range, give or take a few bucks. And that's just one deal that I've owned for 10 years, and I don't even go there anymore. My wife runs the whole thing. My wife and my stepdaughter operate the whole building. I am leveraging myself. I don't trade my time for money. People say to me, they'll give me a call, and they go, hey, could I buy you lunch to pick your brain? And that's trading your time for money. No, you can't. You can't buy me lunch. Use the knowledge that you've possessed in this world to leverage yourself and play Monopoly for real. And that's what I'm doing, and I'm loving it, and I'm having a great time, and my future looks incredibly bright. And one more thing about the 18-year-old mindset. I never had anybody like me to guide me when I got into business, and I probably made some pretty big mistakes. My son won't be making those mistakes because I'm not going to allow it. And if he does well and he works hard, I don't know, man, he could be a millionaire by the age of 25 easily. It depends on him, of course, But the skill set that I have to share with him is going to set him up beautifully. It's going to be very interesting to see what happens.
Nice. Well said. Do you have a URL, company information, any contact information you want to share, Phil?
Yeah, the easiest way to find out what I'm up to is go to addictedtorealestate.com. It's with the number 2, addicted2realestate.com. You can just type Addicted to Real Estate in Google. My stuff will pop up. Put your name and email address in on my website, and I'll send you versions of my TV show, Addicted to Real Estate TV, Addicted to Real Estate Radio, meetings. I'll invite you to meetings I'm doing. I send out wholesale deals, and everything I'm about is available at addictedtorealestate.com.
Nice. Well, hey, Phil, I got 3-4 pages of notes here. I got a ton of great information. I really appreciate you coming on the show. I thank you for your time.
Hey, Dan, it's great what you do, man. You're helping so many people to earn a living in real estate investing, and I listen to your podcast all the time. You got some great people on there. So thanks for doing what you do.
All right. Thanks, Phil. And thank you all for listening to this episode of the REI Diamond Show. Are you receiving the new episode notification email on Saturdays? If you'd like to, you can sign up at reidiamonds.com. Thanks again for listening. Dan Breslin here. I'll catch you next time. And remember, here at the REI Diamond Show, we're dedicated to helping you increase and protect your net worth.
Thanks for listening to the REI Diamond Interview. To receive the REI Diamonds newsletter and interview monthly, sign up now at www.reidiamonds.com.